Hello and welcome. Today's date, Saturday, the 3rd of November, 2018. Let's take a look at Bitcoin after the fact. As I think this is a good exercise when trying to just study technical analysis, go over previous charts like this, and then scroll through time. Obviously, if you had a time machine, you can go back here, tell people a lot of great information. Bitcoin's $5, and that's how it is. But obviously, that doesn't come into place. But be real about the situation, because when you look at situations and then over and over again or more times, then when you see them playing out in real time, it can help you out quite a bit. So if you were one that felt long-term Bitcoin was going to do really, really well, well then obviously you know you did well by playing it in whichever long formation at this point. You can obviously see volatility. This is 2011 and year ending into 2012. A low of 230, a high of 715, and it's already pulling back. That's what the alts are doing today. Hence the size of the volatility this had then compared to the altcoins today. Okay. So then, as we go through, you're in this situation. Okay, it's had a nice run. It's correcting. It's just within the 18 average, yada, yada. Oh, it's left the 18. Oh, okay. But it broke through. That's keeping the choppiness in play. Establishing resistance level at 550, but holding the support, keeping the sideways range longer and longer. And what do we see in a change here? Getting above the 18, pulling back at this resistance level of 548, which was support. Supporting 18 lows, fine, correcting successfully so far, showing weakness at 491, but just an area to be concerned. That's it. And you can see how that concern would lead to optimism when it goes to 506, but still in the sideways consolidation. Even if it gets above it, you got the range here, it's got to get above the 542. You wait, you wait, you wait, you wait. This resistance was established in March. Here you'd be staying into May because we're looking in the daily term time frame. And there's your break of such. So now you've had a statement change at this point. So obviously, you know, in hindsight, it's going to go up. But even by pattern, you can see that, oh, it looked, there's your break above that resistance. That's telling you right there, there's a good chance that this thing could have a good gain, good long setup. And as the good long setup plays, there you have it. Continually going up. You're in a bull market. You would have had a level of resistance at 736 next. So successfully within the 18 still. Now you've gotten above, but barely piercing above that 736 number. And in technical analysis, what's good to note at these points is you're supposed to stop going up here. Now, bullishly, I'd be saying, heck, maybe come back down to 6.5, even as deep as 544 before going back up. But, and even just go sideways and stay amongst like the low $7, high $6 range and for a while. That's another way of doing it too. Go sideways at that point. Another way of stop going up, that is, resistance. But if it doesn't, expect big moves. And then we can see that it doesn't. So the fast moves coming in. That's why when you have resistance or support that's not doing what it's supposed to do, expect major continuation within these moves. So now you at this point, this was all-time highs at $13. Something to think about. So the volatility, $16 down to $7. It came back to where you would expect. So if you were to be thinking, okay, everything that I sell on any gains up here, I want to buy back where it came from, you'd be thinking, okay, this is where it comes from at about 733. And to be safe, I want to go about 750. Well, you can see how successful at that point that would have worked out into being. Resistance next established at 618. So there's the entire look. Now, not at all-time highs. I don't know what the highs would have been before here. But you are back to this level here. So when you didn't resist in here, and I know you need the better data, that I would expect it to go to some of these key previous highs, wherever that is. Now, I don't know what that data number would be, and I'm not going to count this date on November 24th either. So as we continue on with the market, it's had this down move, but when you see these situations like that where it quickly comes into the correctionary phase, and then the dates from September 6th, and then every day after that showing, oh, strength amongst the 18 highs. Has a small break, correctionary move, stays correctionary, little bit of a sell-off. But what does it do? It keeps going back up again. It comes to this resistance point, pretty much going sideways at that level. So that's a spot where an area's resistance, but it didn't go down. That's a pure area of correcting through time. Now, when you see a pattern like this, you have that long pattern correction through time. It's starting to break out. It's 14. I kind of do count this high pretty much before about 1580, and we can see that or 16 and a quarter even, that it got to that point. Not really a big surprise that it got above it, especially when you're long-term bullish and you've established an amazing uptrend at this point. So this is where you go to the market conditions where the sky's the limit, and it obviously was, as we see where it is today. Supporting 18 every time it comes back, but 30, 40. The move, which started here at the 13, just hasn't ended yet. At that point, there was this correctionary move February 14th. Again, it comes into it March the 7th. Again, March the 12th. Again, March 23rd. But a year and change in duration since I've started this going back. We started at the end of 2011 into 2012. Now it's into 2013. And a major bull market. But when you have these moves, at some point, it's got to stop going up. So when you have a move, what's the move from? Because nothing changed from the bull market breakout of that major sideways time correction at 13. 13 up to 229. When you have a move like that, it's got to come back down fast. This is why I like logarithmic charts, because I can see now, oh, key area. You got to consider $48 being a real support test, most certainly 71 in here. And that's if it stops now. If it goes up to 5,000, then maybe it's only going to go down to 300 or 400. That's how sick the volatility of this game would be. But as we can see, it managed to come down to this exact key area here. So the move from here to here, story changes, it came back down, correctionary moves. How are you going to result from this move? Because now we can see the 18 resisting, obviously breaking down below this. We could be talking about going to 20-ish or so. The green moves in here, the next few periods is going to help to stabilize the 18 at least. And going to the 18 average of highs will always make it go flat instant, which it's done. And holding this like that would make the 18 low start to rise because the lowest price is the last few periods very strong. And getting above this is like, oh my goodness, it had its correctionary move. If it gets above this and gets to that point, a situation like this, when you have a big move like this, come back down, and then are able to get above the 18 quickly after that, I'm pretty scared to sell at 246 other than very, very small amounts, because I could... A lot of times you're not a surprise to see it get above it, and we can see getting above 18, showing strength amongst the 18 average of highs, 18 lows really starting to accelerate. Okay, comes back down. We got this low established in here, higher low, so far so fine. 18 doing its thing. Showing a bit of strength on the highs, but this is another low volatile situation in here. As take a look at the size of these periods, which is really going to show what today's like as far as its low volatility. The high was about 130, the low is about 125, so that's a differential of almost $5. 125 was 1%, so that was almost 4%. Just an idea of what our low volatile 1% moves are like today. But as this is playing out, continuing its sideways move, resistance at 280, and then bear market move, breaking down below here, coming down to the upper end of all of these wicks or these picks, whatever you want to call that term, but those lines going down, but getting up to the 18. Now we can see when the green candle concludes on a bearish level, generally speaking, you're not going to go up further after that. So to have 3 periods doing what it is here is a good indication that it would probably be going higher. It would take a lot of time because you'd have to successfully correct to this 18 as it's doing. Resistance established at where we would stand there. Resistance established at like 131. Resistance established in the 150 area. And resistance established at 250. You've already seen it go from 250 down to 60. That was the level of the correction back at this point. There is the continuation of the up moves, getting above this resistance level in here, making it now up to the 130. And then there's that little, any type of flash move like this. When you look at the size of this, I'm sure there was whatever news event driven on this, but if you don't care about news, then you're probably going to oftentimes, I think I would be doing better if I just shut it out completely, but anyway, low 85, high 127, differential 15 plus 27, 42 points, volatility of about 50%, size of the decline was about 30%. And you instantly recovered and get back to where you come from. I've talked about the situation of the failed move, fast move so many times before, and this is an ultimate example. And yeah, we know where it's going to go after this, and it's not going to take long. I mean, it's just going to skyrocket from this point forward, because this is, in a couple months from now, this thing is going to do a 10x move. And this level of support, obviously, is that key level. It got below it quickly, and then some other ones, like the $900 level, that was resistance here. And it reestablished it back to its congestion area really quickly. And then it could stay in there for a while, which it did. That's fine. So having seen that, seeing that it's breaking above the 18 highs at this point, you know there's a good chance this thing is ready for an ultimate move. And how you play it out, well, you can see it did exactly that. The size of these days, green candle 1, low 135, high 145, differential 10 points, almost 10%. Then the next day, another differential of, this is like 20 points, like 12%. So all these 12% days. And it's not even done yet. It established a short-term level of resistance at 205. And what did it do when it broke? You can see, oh, it's breaking at 221. Go long. You're happy. And then it goes all the way up. But when you have these moves like this is the second one we've seen where it just goes crazy. It's well overextended. And you got to expect that if it's going to come back anywhere, it's going to come back to where it came from, which is around here. I'm going to keep this line in because obviously it does. I'm going to put a range box in because you got this here area here is the resistance for this point, and then we'll put another one in right there. But now you're seeing this thing break out from 125 to about 1200. So there's your 10x move. Now this is the situation when Mt. Gox had its fundamental spot where they basically went insolvent, and the thing started to roll over. Now amongst here, you can see after the down move that broke below the 18, it resisted the 18. And then this red candle down pause day, that was a very serious indication there that it was going to at least have a decent leg lower. Decent leg, half-assed move basically would be like the 418. So it had its half-assed move. Comes back to the 18. Resisting with the 18 high, starting to show strength amongst such. So now this is obviously going to result into a failed breakout, but you can't know that at the time because you're seeing how it had two legs lower, it correcting back into the 18, showing strength amongst the 18 average of highs for about a week, and then leaving the 18 average of highs to the upside. This is telling you you're probably going to go back up to 1177 and even break that. There's a nice update, confirmation. Yeah, it's going way higher. Okay, so be it. It's coming back to the 18 to correct. Correcting. Yep, it's bullish. Look at the strength. And okay, well, it's still in the 18. We've seen a lot of these sideways consolidations. So be it. So, and look how long it is. And it's, hey, we haven't really broken down by support. Now you did. Now things have changed. The story is starting to look a little different in here. And definitely time in this case to be cautious, especially if you see declines from this point on, because this candle here went down but came back to where it came from. So going up means, ooh, that's a failed breakdown, but starting to go back down means making that key resistance low, coming back to where it came from, thus resisting the support area. And there's weakness amongst the 18 average of lows now. Continued weakness on the lows, and it ended up barely making an, actually this day here took a huge low down to 400. So now you make a move, get above the 18 average of highs. Now you're starting to talk about lower highs. You got this one. So now the next test is really the resistance area of 740, and it didn't even get to 740. So it tried to go to where it came from, not quite. At least only came to shorter term areas like this congestion area in here in February of 2014. And the continuation going down, breaking this area of key support. Look at the size of the red candle and the follow through. Okay, so it came down there, make another low. So you've had a whole bunch of lower lows, whole bunch of lower highs. Are in a bear market. We drew those lines in before. Those were definitely areas it could go to. So you'd have to be seriously thinking that it's going to do it. But what do we see here? We see a chance. Bear markets are tough to break. So this is a spot where it broke above this resistance at 547-ish. Now it's at 572 then. So you have all of this empty space it's got to fill. Or this, you got to get above the resistance here at about 700. Then you got to get back to this 850 area and then get around that 1,000 mark. I mean, there's so many different of the lower highs. So now it comes up and it's found a move to this previous level. So things are looking very optimistic at this time. But obviously it's going to go down. It establishes this level of support at 556. We've established resistance at 684, and in the process it's going symmetrical, thus resisting here, resisting lower, supporting higher. Okay, it had to down move back to where it came from. And then what happens when it breaks that level? Fast move lower. Bear market city, 18 average declining, never getting above it. And then continuation move. This hot low is what I call the irritating low. And that's not what I call it, but it's irritating. Because if I had a buy order at around 270, well, the low was 275. I missed, and it went all the way up to 400. So within this decline, it finally got above this area where the 18 average, but again, all of these lower highs, it's got to get above. It got above this one in here. So in a situation like this, you get above this high, then you really need to hold a key area. What's the key area? Well, I mean, the last breakout low was 300. There's like, you pretty much have to hold like the 365 area, 365 to 370, I'd be saying. And you can see how it didn't do that. And now you'd be talking about this failed breakout, fast move lower warning setup. And there we have it. So there's a spot where it came down to that first line that we had in. And again, down to the second. So the key levels happened to work. And this was the low. Now, at the time, you'd be like, well, geez, I'm confident in Bitcoin. But I realized I could be wrong. And this thing could just roll over to nothing. I still think that today. But I realize that any correctionary moves are probably going to be good, meaning if my buy order came in at 260 whatever, I wouldn't have sold here, and then I'd have my buy order fill at 159, and I could sell a little bit of it at this high. But now the question is, how is it going to correct since this down move? It's got a major plethora of lower highs that it would have to get above. One by one, it's going to have to do it, with 1,000 being that level. From this move, it would have established support at 210. So that's the key level. So even as it plays out here, if I seen a fall from this point, I'd be expecting support in the range of 217, even down to 195. Because you got this support here as its next key area. Of course, resistance is in the area between 265 and 311, so basically 3 barrier levels of the different areas with this high, whatever. So now the market goes in a sideways move. This key level of support, we can see it came down to. It's been holding at that point for a while. This is a spot where market comes down back to that resistance area level, and then back down to here. This little key level, 191, came close to it. And there it went. So amongst this in here, as it was going higher, like, yeah, it's probably going to go up. But the resistance you'd be talking about during this move would have been here as the big level. And if you want to get technically even a little bit below it, probably there's a good neutral level. Why there? Because it's pretty much this exact number. It's a pierce below here, pierce above here. You could even get more fancy and say, I want to count this, because it's pretty much counts here. It's the high here, it's a pierce above here, and it's the high here. So that's what you'd be expecting when you were seeing strength here. Let's see what happens at this level of resistance. Well, what happened was it got close to it on October 15th, came back down, then got above it, supported pretty much that area, lifted off for a monstrous gain. 302 up to 500, basically a 60% move in about 4 days. So now you've made a statement, reversing the trend, and now the talk about is retracement mode, because you had a high of about 1100. Sorry about that. I'm just getting the fib calculator up. You'd have a low of 150 and a high of about 1150. So the key areas you're looking at are 327, 528, and then at 711. Just key resistance points. So 327, this area here, it kind of was a pierce below it. But you pretty much kind of count that when it's that close. So I would then be looking at, okay, so how's 528 and 711 going to play? Well, 528 pierced below, which is frustrating when you're trying to sell at, say, 520. If you're safe, conservative, sell at 490, it worked out well. But you're also at a point with the high volatility. You came back to this line for where it came from, which was support. So you realized anything you sold up there, you're like, oh, where do I buy back at? Well, you see that 300 or so area? Yeah, that's where you go. What was the low? The low was 294. Good call would be, basically. But that's just, to me, it just happened to work out for where I would have said it would have been. As you can see, resistance got established at 466. Big mark at this point. So getting above it, you would expect a fast move. And again, the Fibonacci stated that 711 would be a key area. And we can see that 711 pretty much was. This case, it was a Pierce Extra, which has pretty much been the norm. Decent sized pullback. Back to where? Where it came from. Look, I mean, it's just consistent. This little line here, 468 area, happened to be this level of resistance. And then we can see how well the 18 average is holding everything amongst this back then. And now we're starting to talk about, because we're showing strength and holding the 76.4, 711, about getting back to previous high. That's what the talk about here when you're in retracement mode. And that's getting back to previous high right here. 1150 high, look at that. Resists right there. So now, where are we coming back to? Well, 711, this area here. Where did it come back to? A large pierce above. And when you have a situation like that, the great 2017 wasn't that big of a surprise, because we had this level of 1150 back in like 2014. We went through all of the bear market runs, getting through all of those highs like normal. Getting back to that point, coming back to a key area again, that was 711. And then when we see this here, this here, and then when it got above here, this was ETF news back then, and it got rejected at that point. This was barely breaking above it. So when you seen it originally, you were like, man, this had the potential at that point to go. But it didn't. You had to wait a bit. You had to have this failed breakdown in here. But when you got out above that 1300 level, then what ended up happening was, well, that of a very fast move to the upside. I'm just going to get rid of this line as well. And there you go. It goes up to like close to 3,000. Pulls back to the 18, now up to about 3,000. Does its sideways thing with a little bit of a blimp, but it still hasn't came back to where it came from. That's 1150. And it never did. It got above this level, and then things were just great for the rest of the year. So yet this would be, I guess, the third great run, where you're going to have to say, oh, when this comes back down, it's going to have to come back to some areas where it came from. And obviously one of them is right here at 3,000. I've talked a lot about 3,000 amongst this channel. I'm not done talking about it, obviously. Short term, it came back to where it came from because it managed to get up to 5,000. Decent correctionary move. And then breaking this level of resistance here. So you can put another line in here. But at this point, again, the bullish situation, you got above this level of resistance, went sideways for a bit, came back down on this day here. This was an interesting day on October 18th because it corrected back down to the 18, broke down below this low, but then it instantly came up to this level, corrected through time, and then the move happened. It just went, and there you go. And what I was saying, that you can expect a decent sized correctionary move. Now obviously 5,000 isn't where it came from, but you could technically put in another line. And we didn't go down to 5,000, it went down to 6. In here. So it came in betweening these two levels. So in the areas in which you'd think it would come down to, you can see here, we got 5,000, 7,500, and 29. Now mathematically, the low was 150. We're going to keep that low because that's really where it came from. It hasn't had any decent bear market at that point since that level. And we can see that the 76.4, which represents a 23.6% down move, is in at 6,300. Also, it also means that the 61.8, which represents 38.2, 3,085. Hence, well, I've talked a lot about it going possibly down to that 3,000 mark if the 6,000 doesn't hold. And I'm not going to do much more but go to where we stand now. This little first level we can see was supported, but again, in between, that 6,300 level was the big level. It has been what Fibonacci is supposed to do. So just like it was before, all the plethora of lower highs to get over within the market, and we're going to be using Fibonacci analysis on the way up. So as it stands right now, we've had the low of about 5,900 and a high of about 20,000. So therefore, when it's finally ready to start making some higher highs, I'm not going to really start to talk serious about this thing breaking them levels until it can get above the 23.6 level, which is over 8,000. Then the next key levels after that are 9,400, 12,500, and then again at about 15,000. Those would be the key areas. Getting above 15,000, you're talking about making new highs, but first getting to 20,000. And then getting above 20,000, what does that mean? Question mark. And the answer is uncharted territory, upside, making new highs, whichever words you want to use, and the potential for monstrous gains. So breaking 20,000 is like, oh, $40,000, $50,000 targets. I laugh at that. I really do. Because that's only a 2x or 2.5x from resistance. So all those people talking about 100,000 and 150 and 250,000, those are the ones I take seriously. On the situation of break of 20,000. And as I've stated so many times before, on the situation of breaking down below the 6,000 area. Well, Fibonacci's in at 3,000, so that's the area. And I've already drawn a line in from before. But how well has that worked historically? Yeah. If you watch this video, you've already known. And you've watched this video, or you fast forwarded to the end. Thank you for tuning in. And have yourself a great day, great weekend. And it might not be a weekend when you're watching it because it could be another year and you might be watching it on a Wednesday. But if you are doing such, the weekend is only a couple days away. Have yourself a great day. Bye-bye.